Good afternoon and welcome to your weekly FX Options Report. Today is Wednesday, February 3rd, 2010. In today's session, we're seeing that the broader equity market is posting modest losses after starting out February with strong gains. Earnings reports as well as economic data releases are in focus. Ahead of Friday's release of the U.S. jobs report for the month of January, the ADP reported that the U.S. lost 22,000 private sector jobs in the month of January. That is still the 24th straight decline in a row. And adding to the good news, December losses were downwardly revised to show a loss of 61,000 jobs. At the same time, the ISM non-services index ticked higher to 50.5 in January from the 49.8 reported in December. Now, shifting our focus on over to the spot FX market, the US dollar is trading higher against the euro, yen, as well as the British pound. Earlier, we saw that the euro had been supported on the heels of the European Commission approving the stability plan for Greece. Now, looking ahead to tomorrow's session, both the BOE as well as the ECB will be announcing their interest rate decisions. And while we're on the topic of central banks, earlier this week the RBA did leave their interest rates on hold while the market had been expecting a 25 basis point rate hike. As a result, the Australian dollar did take a hit against the major currency pairs. Now, one way to trade your views on US dollar strength or weakness is to take a look at ICE's FX options. One advantage is that they are US dollar denominated. For more information, you can go to www.fxoptions.com. Let's take a closer look at the major FX option pairs by looking at the AUX. Now, that is the US dollar against the Australian currency. Now, a bounce is expected for the AUS as it is shaping a rounding bottom. The preference of trading central analysts is long positions above the pivot of 106 with targets at 114.25 and 118.15 in extension. Now, moving on to the BPX, which is the U.S. currency against the British pound, the upside does prevail. The RSI for the BPX is supported by a rising trend line and the pair is rebounding on its support. Now, the preference of trading central analysts for the BPX is long positions above 60 with targets standing at 63.50 and 65.50 in extension. For the CDD, which is the dollar against the Canadian currency, a continuation of a rebound is expected. The pair is challenging a key declining trend line while daily technical indicators are reversing to the upside. The preference of trading central analysts for the CDD is long positions above the pivot of 102 with targets at 107.50 and 111.25 in extension. Now, looking at the EUI, which is the dollar against the euro, the upside does prevail as it has validated a bullish flag. Now, it should post a further up move. The RSI for the EUI is still supported by a rising trend line, and the preference of trading central analysts for that pair is long positions above the pivot of 69.50 with targets at 73 and 75 in extension. For the SFC, which is the U.S. currency against the Swiss franc, a continuation of the rebound is expected. Now, the RSI does call for a further advance, and the preference of trading central analysts for that pair is long positions above the pivot of 101.25 with targets at 108 and 110.25 in extension. Last but not least, looking at the YUK, which is the US dollar against the Japanese yen, the upside does prevail. The pair is pulling back on its former channel resistance, which should act as a support. The preference of trading central analysts for the YUK is long positions above 88 with targets standing at 93.50 and 96 in extension. Now, let's take a look at your weekly trend opinion for the major FX option pairs. Now, last week the US dollar did lose some of its bullish momentum and many pairs are approaching key technical levels. They do still have their call on the PCO open because the target has not been reached. In terms of this week's trade alerts, Trading Central does have one for you for the GBP, which is the British pound. Now, Trading Central is recommending, as they did in their follow-up on Monday, to consider puts on the GBP, which is the British pound against the U.S. currency. The RSI is still capped by a medium-term declining trend line and should favor further weakness. Now, they will also be looking at the EUI as well as the CDD. They are looking at the EUI because it has reached its bullish flag target and should face a pullback ahead of a further up move. They're also looking at the CDD because it has rebounded on its strong support and is challenging its resistance. Now, looking ahead to the upcoming week, Trading Central analysts will be looking at the AUX, SFC, as well as the New Zealand dollar. Now, they will wait until the end of this US dollar consolidation before entering new positions. Now, they will be watching the AUX because it is shaping a rounding bottom and is currently challenging its resistance. They're also looking at the SFC because it is approaching resistance and should pull back before a new up move. And they are looking at the NZD because it is shaping a range and has struck against its resistance. Now, a break above this level will call for a bullish acceleration. And that does wrap it up for your weekly FX options report. Make sure to tune in next Wednesday for your latest update. Thanks for watching and have a great week.